Welcome back. A blend of exogenous shocks sent global markets into a frenzy on what was described as a Black Monday. This was after the global oil prices plunged more than 26% after OPEC failed to strike a deal with allies regarding production cuts, which caused Saudi Arabia to slash its prices as it reportedly gets set to ramp up production, leading to fears of an all-out price war. Investors at the Nigerian stock market lost 329 billion naira on Monday, and with the fall of oil, which is Nigeria's major source of public revenue, taking a hit, there could be nothing worse for an already struggling economy than having her source of revenue negatively impacted. Now, how can investors trade their investments at this time? I'm being joined by the head portfolio management at Commercial Partners Asset Management, Victor Aluyi, to talk more about this. Good morning, Victor. It's good to have you on the program.
Thanks for having me.
So we saw the global market plunge after oil prices slashed on Monday, and the Nigerian stock market lost over 300 billion naira. I know that investors, of course, do not like uncertainties, but is there any cause for alarm?
Well, these are apparently seriously concerning times. So if you look at, the factors that have led to this market plunge, particularly the falling apart of those OPEC Plus talks, they're quite fundamental because if you look at the role that OPEC Plus has played in propping up the crude oil market since 2016 thereabout, it's been quite significant. And every time they have had to come to the table to agree to a deal, it's pretty much always been done. There have probably just always been discrepancies around the kind of volume that they want to cut and all of that. So the market was really, really blindsided by how things turned out on Friday. The expectations had been that, there was going to be a cut of about 1.5 million barrels. Worst case scenario, even if the Plus members led by Russia did not agree to that, OPEC was going to go ahead to implement some cuts. But apparently, I'm sure maybe some egos were hurt, during those conversations, and Russia did not agree to those cuts, and Saudi Arabia decided to lower the price on some of its, on its oil, and basically sent crude prices into a strong spiral over the weekend. And obviously, global markets didn't quite take that lightly because of the sort of impact that has on energy prices. So that's why we saw global markets react the way that they did. And like you rightly mentioned, markets really don't like uncertainty. So you have a number of factors that are essentially pressuring global markets as it is right now. You have COVID-19 on the one hand that is still there and continues to rage. And then you've got the crude oil situation, which, happened really quickly with crude prices essentially falling off a cliff and, tumbling very fast over the weekend. So the uncertainty with the whole situation continues to plague the market. The market essentially continues to reel from it. If you look at our local market, if you look at what happened over the weekend and compare where market closed on Monday, if you look at where the market was in terms of a peak sometime in January, the market has lost almost 3,000 points. From a sectoral analysis, the banking sector is down almost 30%. Same thing for the consumer sector. So this is clearly reflective of, the overwhelming risk of sentiment, in markets right now. So that's what's going on, really.
So where does that leave us here in Nigeria now, knowing that the budget is predicated at $50 a barrel? Of course, the federal government has announced plans to review the budget, but at what price are we likely to see or to peg the oil benchmark now?
Well, I mean, truth of the matter is that, it becomes even tougher to try to navigate this sort of situations because of a lot of the unknowns that, sort of still exist. However, we expect that cooler heads could prevail in the coming days, and I'm talking with respect to the OPEC Plus agreement. We expect that cooler heads will prevail in the coming days because this sort of strong decline doesn't serve either of the caucuses well. It doesn't serve them, well. So we would expect cooler heads to prevail in the coming days. But for Nigeria, I think this period it would essentially be a blip if you would look at the entire year going forward, this period would be a blip. So in terms of revising that, benchmark, we're probably going to be looking somewhere more realistic, maybe around slightly north of $50 a barrel or slightly lower than that, between 47 and say $53 a barrel, I would reckon, would be a good place where they might want to review that. But for the broad economy, there are other far-reaching implications. Like you rightly mentioned, Nigeria essentially is a crude story, is a crude economy. So whatever happens to crude essentially has a direct impact on revenue and then the economy as a whole. So clearly, this is a very, very big issue that policymakers have to respond to adeptly, quickly, to ensure that whatever the potential crisis is warded off, or at best the impact of it is significantly reduced.
But what if the cooler heads don't prevail, just as you mentioned? Where would that leave us?
That would be really tough. That would be dire because on the one hand, like I pointed out, you have issues that continue to plague supply and also demand in that crude oil market. So you would most likely see, crude prices even dip further. However, I don't think you will see them dip below the mid-20s. They might, stay settle around that level. However, I don't see any factor that would basically tick them back up very quickly, except, of course, we've got significant traction on the COVID-19 front. If there's some positive, movement on that front, that could serve to, lift oil prices in the interim. But if we don't have any traction on that front, then we would see oil prices remain subdued in the absence of any agreement between, the OPEC and, Russia. So.
But with the current situation of things now, of course, Nigeria's budget is seen as unrealistic at 10.59 trillion naira now. What should be the realistic budget looking at the situation of things currently? Well,
so it will basically be guided from the benchmark and revenue targets. Suffice it to say that for a lot of times we never really hit those targets because we've been challenged revenue-wise for quite some time now, So it's not so much of that for me. It really is so much around the reform policies that are, coming through, so much around the sort of coordination between the fiscal and monetary authorities to ensure that, the economy is able to weather whatever storm, that's coming really. So I think those are the foremost concerns right now as it is.
But do you see the government borrowing more at this time?
Well, it's tough to say. For me, borrowing really isn't the issue. It's really how those borrowed funds are actually deployed to create value such that paying back doesn't become too strenuous, if you will. So yes, there is a tendency for that to happen, but it needs to be properly channeled as well. So I think those are the issues that we need to contend with.
But if we borrow at this time and looking at the falling oil price, which is our main source of revenue, how do you think that the country will be able to pay back?
Well, I don't know that that's going to be so much of a problem. Again, if you're going to borrow now, obviously there's going to be a significant impact on the pricing. For instance, there's a Eurobond issue that's been billed to happen this month. I don't know if that's still going to happen, seeing all of the uncertainty that's happening in the global markets. Even if it goes ahead to happen, obviously the pricing will be significantly worse from our own perspective as Nigeria compared to a couple of months ago. So, pricing is something that you've got to consider, seeing what's going on globally right now. And also the need really is something else to also consider. But again, with the looming revenue shortfall, it only makes sense that you're likely to see a little more, borrowing on that front. But again, I wouldn't hold my breath. It might not necessarily pan out that way.
Well, Victor, some have argued that all of these domestic macroeconomic witnesses would possibly mean that credit risk profile of Nigeria will heighten. Now, do you see this in any way affecting the cost of borrowing, of course, to fund the 2020 budget?
That's what I essentially just highlighted. So I think about a week ago, S&P essentially downgraded our outlook from stable to negative and basically citing declining reserves. If you then put on what's going on now, the picture is even more dire. So clearly, pricing would be a challenge for us really to borrow right now, particularly from an international perspective, or if we're looking to tap the international market, it will be challenging in terms of pricing, But if that needs to be done, I think the government will still go ahead and do it, but it will have to pay up at this point.
So with all this now, it seems that devaluation is looming as the major source of government revenue in the country is under attack now. But what can you say about the capacity of the CBN to keep defending the naira peg?
Well, I think the two things really will be around capacity and obviously the cost of defending the naira peg as it is right now. I think that the CBN would have to come out to do something about its core mandate of defending price stability particularly here, for instance, where we're looking at the foreign exchange situation. We're facing what I'll describe as severe external weaknesses as it is now with the events that we've seen over the last couple of weeks. It really then behoves on the Apex Bank to come out now and decide what he wants to do. But I think that the ammunition with which he continues to defend the naira is running thin. Look at what is happening to our reserves. We've basically bounced through almost $10 billion since its peak last year in May. What's going on with crude prices right now, you essentially would not see any major accretion to the reserves in the short to medium term. So clearly, those are very major concerns, and I would expect the Apex Bank to come out and address those. And how he actually goes ahead to address it is also very, very paramount, because we have to be mindful of the capacity, apparently, and then the cost of defending the naira, and even to decide whether it's still worth it to go ahead and defend it at this point.
But if you were to attempt a fundamental valuation of the naira at the moment, what would you say, or what would you describe as a fair value of the currency?
Well, I wouldn't want to hazard any attempt as to where the fair value of the currency would be at this time, really, at the end of the day. But I think that if you look at the capacity of the Apex Bank to continue to defend, it would continue to be really costly. As to where it would go, really, at the end of the day, that could be anybody's guess, really. But these are tough times. Reserves are challenged. Externally, we're very weak right now. So really, it behoves on the Apex Bank to really come out and decide what he wants to do and decide what he thinks it's beneficial and cost-effective in terms of managing that exchange rate.
But what would you recommend on how investors can, proactively hedge against a possible devaluation of the currency?
Well, I mean, if you're looking to hedge against that, it's really simple. You want to essentially, be exposed to assets that would ensure that you don't have any currency exposure as it is, really, So that would be one way to basically look at it, and it's really clear what a lot of people have to do. And part of what people are doing to try to hedge is also continuing to put pressure on the naira as well, because clearly the demand for the greenback continues to rise, So it's really clear to see what people have to do, really. You just have to get exposure to the currency where you don't have significant currency exposure on the other side, really. So,
all right. So what kind of investment strategies would you recommend at this time, especially with the falling oil prices?
Well, I mean, so even with the falling oil prices, you have to look at the market holistically. And like we said earlier, markets really don't like uncertainty. So in uncertain times, really, you want to stay safe. Like I said some other forum yesterday, really right now, it's a question of the return of your capital versus the return on your capital. So do you want to go ahead and take any risk that would endanger the return of your capital? So right now, times are really uncertain and kind of tough. Typically in this kind of situation, cash is king.
Well, that would be a good point to leave the conversation. Many thanks. Head Portfolio Management at Commercial Partners Asset Management, Victor Aluyi. Thanks for coming on the program. We'll take a moment now and we'll return in just a bit. Please stay with us.